Right. So you done with the part A?
Yeah.
So define the variable cost. Part B done?
Yeah.
Okay. Part B is 50, yes. Part C did you do? Break-even point? Yeah. What's break-even point?
Where the like the expenditure is
Yeah, total expenditure is
equal to the
total. No, not profit. Total revenue, yes. So as a result, what's the profit there in the break-even?
zero.
Yeah, neither profit nor loss, right? Okay. What's variable cost?
It's like your cost per unit. So if I'm spending like $120, that'll be your variable cost.
Yeah. So variable cost is the cost.
It's like influenced by the quantity. So
Yeah.
if you produce more, your variable cost will go up.
Yeah. So variable cost is the cost or expenses that vary, that changes, that change with the level of activity. Yes. Right. So example, cost of material and labor. Right. Part D, okay. 11 we did. Yeah. Then part E.
It's just like it's 11 times 150.
11 times 150, no.
Oh, 170.
What? No.
What?
Read the question.
There's like two questions.
Yeah.
Um,
No, the part E just calculates the revenue. The next part is for the part F.
Oh, okay. Is it 11 times?
Yes, but sales revenue to achieve the desired monthly profit.
Is it 170?
No. So 11 is the quantity, yes? You times by what?
Your selling price?
Selling price. What's selling price?
Isn't it 170?
No.
220, sorry, 220.
220, yes?
Good.
Yeah, so then yeah. So basically, you're getting 2000 for 20.
Yeah.
Okay, part F, try. Read the question properly and then try that. So the question starts from the manufacturer of the skateboard.
So if it E,
Yeah, E.
right, R, sorry. The new price of skateboard would be 172.5,
No. You sure?
but it says the wheels and frame are like.
No, it can't be.
Oh, wait, no, I'm done with that. Wait. Wheels. One seven two.
172. You sure? Okay. Shall we work it out?
Like just the cost of like the skateboard.
Oh, you mean the variable
Yeah,
cost?
variable cost.
Ah, okay.
172.
Okay. A variable cost is 172.
Because the wheels and frame
Yeah.
has
Wheels and frames, which is
20 has increased by 10%, which is 22.
22.
So you add 145 plus 5 plus 22, which is
Yep.
172.
Yep.
And then your selling price is
So then formula. We'll write the formula first. What's the formula, Timur?
so your total like fixed cost.
Okay, fixed cost. Uh,
Wait, we're trying to calculate the selling price, right?
yeah, we are calculating the total fixed cost.
Over selling price per unit.
No, before that,
Oh, you
plus
your profit,
profit,
and then you do selling price, which is X,
selling price,
minus
uh,
the variable cost.
variable cost. Yep. So
Um,
this one is basically selling price per unit. Yep. Minus variable cost per unit. Yep. Then equals to what?
Okay.
No. Yeah. So 10, which is what is it?
Like your
Quantity.
yeah.
Quantity to be sold. Yes.
Yeah.
That's what they have given us. So now we can find it, which is quantity to be sold is 10. Fixed cost is 400. No change. Profit is monthly profit is
So
200. Right? Over selling price per unit. Let's take it as X minus variable cost per unit is 172. Okay.
232.
232 is the answer?
Yeah.
No. Why not? Why not?
It's of the selling price plus GST.
Yes, plus GST.
Yes,
That
yes.
means
It's 255.2.
yes. So this one we cross multiply. Then
I think you can wash my hair.
yeah, go. 600 divided by 10.
But if you increase the selling price,
Yep.
you're like decreasing the. Are we allowed to use like rate like consumption,
Sorry, what is it?
like consumption and things like that?
Yes, but not too much. You can rather than consumption, you can talk about demand. See, so what G is asking, explain how an increase in selling price could lead to a decrease in profit.
Yeah.
Then what will happen?
So since you're increasing the selling price,
Yeah.
the average consumer
Yeah.
would become like less like they would have less autonomy to buy it.
Yes, it's basically they are less attractive.
Yeah, because
They find it more expensive.
yeah.
Yes.
Like if you say like disposable income,
Yeah.
like they like the average consumer doesn't have that much like purchasing power
Yeah.
to buy the product like the skateboard.
Yeah.
So increasing the price would probably decrease sales.
Yeah.
Since the consumer
Correct.
can afford it.
Yeah. Correct. Basically, yeah. I've taken down the answer.
Also, that shows you the legal studies, like things we have to learn.
Yep. Okay. Firstly, read the question.
Selling price.
Now, first of all, this is the first time that you are seeing. What is it? income statement. Yes. Have you seen an income statement before? No. So basically, income statement is basic. It is kind of, this is the basic income statement, but this one will really be different in the future, especially when we do unit two, right? So, however, income statement, what is income statement? Income statement is the report that we list down all the revenues and expenses for a given period of a given accounting period, and then calculate the profit or the loss for the business in that period. And this is the second report that you are seeing. What is the first one we did? Balance sheet, and this is the income statement, second one. And then we have one more, which is cash flow statement. We are also going to do in maybe in a couple of lessons, right? Cash flow statement. Right. So then income statement, firstly we have sale of kites. Now see, this one is fly a kite, right? And then during the show, how many kites did they sell? 50, yes. So they have sold 50 kites, right? Right. Now they're asking firstly, calculate the selling price per kite, including GST. No. Firstly, forget about the GST, right? No, firstly, there is, we don't report GST in the income statement, okay? There is no GST. The reason is, why is that? Now you can think, yeah, that's tax because because that's a tax charged by the government, and the business, you think the business can claim it?
That's because they're not the same sector.
Very good. So business can't claim it. Right? Let's say if I charge you GST on your fees, I can't keep that. I can't put it in my pocket.
Yeah.
Why? Because it's not my money. I can't claim it. So I have to forward it to the ATO, tax office, right? So like that, GST cannot be identified as a revenue, and also it is not an expense. Okay, we'll do that. Our next lesson is GST. We'll do that. So I'm going to start that today. Right. So then, guys, this one. So 50 kites, right? That means we can calculate the selling price per unit. You want to calculate? How do we calculate? No, it's in the question. So, what is the, sorry? No, not variable. Now see, what is this one? Sale of kites.
Oh, so it's 180, that divided by 50.
50, which is 30, 1800 divided by 50, which is 36, yes. Hold on, that is the problem. 36 is the selling price. But for that, you have to add GST, which is 360, yes. So that means we'll get 39.60.
Yeah, okay.
Make sense?
Yeah.
Good. Next one, part B. Calculate the variable profit. Variable profit means contribution margin per kite.
So it's 800 divided by
800 divided by 50, which is 16, yes? Right. Okay, otherwise we can do like this as well. Now, we have 1800 divided by 50, which we calculated 36. Similarly, we can calculate the cost of sales, which is the total. This one we can say, what is it? Total fixed cost, total variable cost as well. Another term for this, total variable cost. So then we are getting that one as, that also we divide by 50, which is 20. 36 take away 20, also 16. Either way you can calculate 16. 800 divided by 50 also 16, otherwise 36 minus 20, also 16, right?
Okay.
Okay, then that was you can say 800 divided by 50, 16. Then C. Okay, calculate that.
So the total like expenses
Yeah,
is 880,
880.
and then the selling price
Okay,
is 36.
yes.
So
So what is 880 is the total?
fixed cost.
Yeah. So then what's our formula? Let's write it.
Total
Break even point. But basically we calculate it in quantity. QTY is equal to
total fixed cost minus
total fixed cost.
over selling price per unit minus variable cost per unit.
Yeah, which we call as contribution margin. Yes, I'll write selling price per unit. Take away variable cost per unit, which is total FC is 880. Yeah, 880 divided by we already 36 minus 16, which is 20. So 40, 44, yes, equals 44. So this one, not the dollar mark, right? It should be 44 units, yes. 44 units.
And then to the next one is this 44 times 36.
44 times 36. You sure?
Um,
Hold on.
this is asking for the
Revenue earned at this point of sales. Yeah, you are correct. 44 times
36.
36.
Isn't it the number of units times 75?
Hold on, there is something wrong. No. No, we have, I think we have made a mistake. This is not 16. What is it? Variable cost per unit is 20, yes, not 16.
Less cost of cars.
Yeah. So variable cost per unit, how much? Is it 16 or 20?
Wait, no, it's so the sale is the selling minus the cost equals the profit.
Yep.
So the variable cost would be 1,000 divided by 50.
Which is
20.
20, yeah. So then 16 880 divided by 16 is 55. Yeah. So this is not 44, it should be 55 units. Then selling price per unit, no, not selling price per unit. Sales revenue.
Times 36.
Revenue at break even is equal to break even quantity
Times selling price.
times by the selling price
Which is
per unit.
55 times
Yeah,
36.
so basically 55 times by 36, then 1650 plus 19, yeah, 1980, yes, 1980. Then that is done. Part, what is it? ED, calculate the sales revenue. DE, yeah. Yeah, I'll give you the answer. What do you think?
Like matching, like vendor's price.
Yeah, what do you call matching the whose price?
What
What did you say? Matching?
competitor's price?
Hmm? So you can do competitor's price. What else?
Recommended retail price.
Yes. This one wouldn't have this one recommended retail price.
Consumer reaction.
Doesn't know. Yes, market reaction. Because why? This one they are not talking about franchise or anything because they are doing kite shop. So I don't think there is a RRP. So basically, these are the two things.
I forgot how to do F.
F for
A percentage markup.
yes. So how do we get the percentage markup? So do you remember the concept? What is markup?
Okay, increase in the selling price.
Increase in the selling price? No. Why did we use markup for?
It's like a method of price setting.
Method of price setting, yes. What is the concept of markup?
You're like increasing the price.
Yeah, which price?
Is it not the selling price?
No. Not the selling price. Cost.
Possible.
Yes. So, okay, read the note.
Okay, so if you have the cost price as 100 and you have your percentage markup as 25, the
Yeah.
selling price will be 125%.
Yes, correct. So basically, what is markup? Markup is
Determine the selling price by
very good.
the predetermined cost of the.
No, not predetermined
Oh,
cost.
like a predetermined like a margin.
Yes. So so remember, I remember for my example. Remember I gave the example. Let's say you purchase anything, purchase let's say calculator, right? You purchase a calculator. Let's say cash. You purchase cash for $200. Then you want to make a markup of 50%, right?
Yeah.
So otherwise, in this case, I'll say we are thinking, look, we want to make a profit of 100. Okay. So our cost is 200. We want to make a profit of 100. Then how much is the selling price? 300. Right?
50%.
50%. So how did you calculate 50%?
You just put the markup
Profit over
the cost price.
cost times by 100. Now you try to.
Okay, so it cost him 1000,
Yeah.
and then
How much is the?
and then what is Marco? 800.
800. Yes.
800.
Yeah.
So that's a 80% markup.
20%. Yeah, I did the per unit basis, but you can do it in the total as well. Okay. Then part G, you can try.
So it's asking you to find the quantity.
Asking you to find the quantity is
So the total fixed costs will increase by 100. So it'll be 980 plus the profit. That should be right. And then his wages increased by 5%, which is okay. So his total fixed cost is 1005.
yeah.
And then his selling price we'll say the same.
Yeah.
So that's so $36.
Mm-hmm.
And then his cost price is $20.
Yep.
And he needs to find the quantity.
Yep.
So what's this? I don't know. It's time the profit. Do you need to time?
No, you don't necessarily need the type of profit because you have to calculate the what is it? The quantity.
Yeah.
Yeah.
So you just do 1005
Mm-hmm.
over 36 minus 20. As 62 dollars and 81 cents.
$62.81. No.
So you used to do 63 units.
63 units. So is the answer 63 units?
Yeah.
No. Read the question properly. You haven't read the question.
How many more cuts? So you can wait 55, so it would just be 8.
Yes. Yeah. So especially in accounting, other subjects as well. Read the question. Yes. Okay. So then that's it for pricing strategies, right? So how many pricing strategies did we do? No. We did 6.
6.
Yeah. Yeah.
First down 4. Oh,
Okay. So we did 6, but out of 6, for how many did we do calculations? No. We did 3, yes? We did only for 3. Yeah? Yeah, so what were those? Quotation, markup, and this one, cost volume, profit analysis, right? So that's it. Have you written all the theory answers? Yeah, because I saw some gaps are there in your tude. Don't have gaps.
yeah, I wrote there.
Yeah, good. Then basically that's it. Any questions with this?
No.
No? Right. Then we'll do the next lesson for today, which is source documents. So, source documents. Have you heard about source documents?
Like primary and secondary sources.
Primary, secondary sources.
Like the original source.
Uh-huh. No, not that one. You are talking about, I think, surveys, yes? Survey,
History.
history.
Yeah.
What is primary sources?
Primary sources is like documents and materials that come straight from the source.
Uh-huh.
And then secondary sources are like materials that have been like transcribed or passed down from source to source.
Oh, yeah. Yeah, then in that sense, yeah, we are talking about primary. But so I think you are referring to different subject, yes?
Yeah.
But these are source documents. Apart from that, have you heard source documents? No. But actually we deal with these source documents. Do you go shopping?
Yeah.
Receipt. Already receipt. Right, so when you paid some money, right, to a seller or another party or shopping, I mean, the shop or maybe the supermarket, whatever it is, then you get a receipt. Yes. So what is receipt? Because you said receipt. What is receipt?
Like a like a sheet and it has all your purchases on it.
Yeah.
It also has like the GST sometimes.
Yes. Yeah. Correct. So basically, receipt is what? A confirmation of
Your purchase.
purchase or cash received for a exchange of goods. So basically, receipt is for the seller. Seller is receiving money. That's why we call receipt. Right. Okay. However, source documents, basically what I call them is like, so these are the basic or primary or evidence for the transactions, right? So now, for example, when a child is born, right? What does the hospital issue? Birth certificate, yes, birth certificate to prove that a child is born, and then that basically proves that man's birth. Similarly, right, what I call these ones is source documents are like birth certificates for transactions.
Yeah.
Yeah. So the source documents basically verify the transactions, right? For example, let's say your parents give you some money to purchase maybe a book or a calculator or stationery, something like that. Then if your parents ask, look, if you purchase them, right, how do you prove it? You can prove, basically, simply you can prove with the source document or the receipt. You can say, here you go, this is how much I purchased it for, right? So you can prove it. Okay, so firstly, functions of source documents. Take down this one.
Can I write GST?
Yeah, that's how.
Instead of writing like goods and services, then can I try GST?
GST, where do you want to write GST?
Instead of goods and services tax.
So, no. Write as it is. Yeah.
Yep, I got it.
Okay. Okay. So, so what is the source documents? As I said, they provide evidence for the transactions. Information supported by source documents ensures faithful representation, right? So what is faithful representation? Do you remember the definition?
Like a representation that doesn't defame.
Yes.
Or,
Basically it proves that real world economic event of the businesses have been reported in reports in such a way that the information in the reports are complete, free from material errors, and free from bias, right? So then the other things. Next one. Second one is important for the tax. Mainly, so there are two types of taxes. Especially if taxes we are going to do in details in economics in unit 4. Okay. Unit 4 we will do it. So however, there are two types of taxes. The taxes which are charged on the revenues or earnings, right? Which we call as direct tax, and then the other taxes are charged on expenditure.
so, housing, rent.
Yes, so basically on expenditure means, yeah, you are correct on rent. Expenditure means like when we spend money.
Goods and services.
Yes, very good. We call indirect tax. So, see, government charges us taxes when we make money
So,
and also when we
tax.
spend money.
So,
Pretty smart, yes?
yeah, so the direct tax would be like income tax, right?
Yes.
And then indirect would be goods and
Good
services.
sense, GST.
Okay.
Yeah. So basically, two types of taxes. Income tax for a business is charged on their profit,
Yeah.
right? And then the other one is what is it? Goods and services. GST tax. GST is actually charged on the expenditure.
Those are gonna be taxes.
No. There, I mean, yeah. For our study design, that's all what we require. Actually, we don't calculate the income tax. We do only GST.
Oh, so you don't have to do the PAYG.
PAYG we don't do,
Okay.
right? PAYG we don't do. Why? Because for counting we don't deal with the individual people's accounting. We deal with the business accounting, right? So then for businesses, we don't have to worry about PAYG because PAYG counts for personal tax, right? So for people's tax, right? Citizens' taxes, but their income tax. But this one, income tax is basically charged on the business profits. So then we don't deal with the PAYG. Then also we don't deal with the corporate taxes. I mean that usually corporate tax is 30%. We don't calculate that as well in VCE. But if you do accounting in the uni, yes, you will do. Okay. For my VCE, I did, those ones, but unfortunately, you don't. Your study design doesn't have. Okay, so my VCE, I had partnership accounting and company accounting, but for you guys, VCE, you don't have. Okay, so then GST, right? Is what we are. GST, however, we deal with very thoroughly. Okay. So GST, right? What is GST? Basically, GST, of course, you know. GST is, as I said, it's an indirect tax charged by the federal government. Usually, it is 10% on the selling price. 10% on the selling price. Importance of making GST related transactions. Basically, why we need the GST is because the GST two types of GST transactions are there. One thing is what we receive GST or we collect GST from where? From the
Goods and services for sale.
from the where do you collect or receive GST from if you are a business?
We collect you get it from the transactions from the consumer, and then you give it at ATM or something.
Yeah. So where do you get it from? Customers. So if it is for me or our center, so we collect GST from you, from students, right? So then that is one transaction. We charge it on our fees or revenue. If it is like let's say supermarket, then when they sell their groceries, they collect GST from their customers, right? Then the other one is we pay GST. How do we pay GST? As a business on our supplies for our purchases.
Oh yeah. So if I get entities purchasing something, they are contributing to GST. GST tax on their own money. And then whoever they're giving the money to, that entity will have to deposit the GST somewhere.
Correct. So basically, now, for example, when we collect GST from you on our fees, we can't keep that money. Okay. Let's say we collected $1,000, $10,000 from you. Somewhere, from 10,000, then we have to pay GST 1,000. So we have collected 1,000 from you. Okay. That means we have to forward that 1,000 to 80.
Yeah. So when you when the transaction is made, it comes with the 10% GST, right? So you don't have to get at the end, the cumulative of the 10,000, it will be 11,000.
Correct. So basically, when we collect 10,000, on top of that, we have to collect 1,000, which is 11,000. Then 11,000, we are getting money. From that 1,000 is for the ATU. So we have to send it to the ATU. Then there's another thing. So let's say in the meantime, we pay GST to our suppliers. Through whom maybe our rent, our landlord, will pay GST. Then maybe if we purchase for electricity, water, right? Gas, we have to pay GST. Then internet, we have to pay GST. What else? For materials, maybe paper and ink. Electricity, ink. So for them also we pay GST. Let's say we pay expenses 4,000 plus GST, 4,400.
Yeah.
Okay. That means, see, we collected 1,000 GST and we paid 400 GST. The GST we pay to our suppliers, can they keep it in their property? No, they also have to forward that to them. Eventually, what we paid for the GST, it will reach the 80 one day. That means, what can we do? How much net amount do we owe now? The 80.
A lot.
Right? Does that make sense? So,
Because that's
yeah, how much did we collect?
1,000. And then
We collected 1,000, yes?
and you gave 400.
Very good. Then you paid for 400. We didn't pay it to the ATO, but it will reach the ATO, right? One day. Then, how much is the net amount?
600.
600 is what we owe. So then we don't have to pay this entire 1,000.
Yeah. Oh, so like if you wanna like spend less, like give less GST, you just have to
You have
spend
to purchase.
more on your expenditures.
Yeah.
What if you spend more on your expenditures? than
Yes,
your
that's a good question. That's a wonderful question. So this 600, firstly, I'll explain you. This 600 we call GST settlement. Right? 1,000, what do you call?
GST.
GST received. GST received. And this one is GST paid. 1,000, 400.
Oh, like accounts receivable, accounts.
Yes, something like that. Right? Now what is happening? GST settlement, 600. So you have to pay it in cash. But as you asked me, we had paid, let's say we paid 1,000. So we received 1,000. We paid 1,200, for example. That GST paid was 1,200. That means we have overpaid. That 200 we are going to get from the ATO. We call GST refund. So before you receive it, we will call this one GST settlement, we will call actually GST payable. This 600 will be GST payable before you pay it, right? But when you paid it, or by the time we pay it, we call GST settlement. So on the other hand, this GST refund, before you receive it in cash from the GST, from ATO, you call GST receivable. Why? Because we overpaid 200, which we should be receiving eventually.
Oh, yeah. So GST refund and GST receivable is the same thing.
Yes.
Okay.
Actually, it is the same thing, but before you received it, don't worry, I'll explain you later. We are going to do calculations. Before you pay it, don't worry about writing. I will give you notes, right? This is I just gave you. This is I just gave you like
We are
roughly.
doing it properly.
We are doing it properly.
Basically,
When we
let's say
at the end of the period, we ended up in GST. It's going to we have ended up in overpaying the GST to the ATO, or GST we have overpaid to our suppliers, meaning we should get a refund. Then otherwise, we should get what? We should get I mean, when we receive money, it will be GST refund. Okay. So basically, that's the thing. Right. Now, tax invoice. Tax invoice.
tax invoice.
Right. Tax invoice.
Take down this.
Take down this on GST. Tax invoice. Yeah, please read this part up to the to here. after this part. Okay. Right. So, tax invoice. Firstly, I'll show you what a tax invoice is. Right. Now, have a look at this one. Now, this one is a tax invoice. Why do we say tax invoice? So remember, I gave you some points for the tax invoices. What is it? Source document is
Contains information about the GST that is required to the ATO.
the term tax invoice, amount of GST, Australian business number. What is the Australian business number? ABN. Yeah, ABN. And then um, name of the seller, transaction date, description of the products, and the price of the transaction, including the GST. So then basically those information should be there. So tax invoice, what I showed you, right? Now see, this is a tax invoice. Why? Mainly tax invoice means what? Any source document that includes GST. You think this one has GST? Yes. Look at this. $60 of GST, right? 60 GST. Okay.
Does it have to include everything, like the information?
Yeah.
Huh?
Sorry?
Like, you know, where it says information included in a tax invoice, it has like the word tax invoice, amount of GST.
Yeah.
To classify as a tax invoice, does it have to have every single one of those?
Yes.
So if it misses like the name of the seller,
Yeah.
have those sorts of.
No.
Okay.
Because the why we use it as for tax invoice, it is basically giving information for the ATO to calculate or work out as GST. See, this is another one. Right. Okay. So then we'll keep going. Have a look at the types of source documents we are going to do.
Right, so cash received is like you purchasing it.
Yeah.
And then cash paid is you paying for the GST.
Yes. So no. Cash receipt. You mean the receipt? Yes.
Yeah, receipt is like when you actually make the purchase. And then
No, it can be either way. Now, if you are a seller, let's say you have a shop. So when the customers come and pay you GST, it's a what? Receipt or payment. What are you going to issue?
pay GST, it's a
Receipt.
well, why is it a receipt?
No, now if you are a seller, you sell items, right? Products, then you will receive money, yes?
Yeah.
For which you will issue a receipt. What did I remember? What did I explain you as a receipt? Confirmation of cash received. Okay? So confirmation of cash received. So that's the receipt. Okay? Then if you are a seller, then basically you will issue a receipt to the customer. Similarly, let's say if I am a buyer, or if you are, or I am a buyer, right? If I am a buyer, what will happen? Basically, again, I will get a receipt. So, if I am the buyer, let's say, I will get the receipt from you. So when I get the receipt from you, then for me, I have paid GST.
As a seller.
Yeah. No, not as a seller, as a buyer. You have collected the GST, right?
Because you spent it.
Yes, you have collected GST as the seller. As the buyer, I have paid GST. So then the same source document can work as, right, for both cash received and cash paid. Right? For the buyer, it's a cash payment, but still he has received a receipt. For you, for the seller, as the seller, still issues the receipt. That's the party. Always remember who issues the source document? Seller. Yeah. Always it is the seller that will issue the source document. So the buyer is not basically issuing any source document. Right. So these are the source documents that we will discuss. Right? I will show you the source documents next time. Right? So we have different transactions. For example, cash received, cash paid, right? Credit transactions. So credit transactions. Return of inventory. Yes, return of inventory. Then next one is internal transactions. Right? Internal transactions means yes, inside the business we are carrying out some transactions which we call as internal transactions. These questions still you can't do, Timur. Probably we'll do it later. Right? Okay, firstly I have to introduce you the types of source documents. Then we'll do the rest. Okay. Then thank you.